Everybody, welcome to the morning show here on Stock Market TV. Spencer, JC, Steve, Alfonso with you this morning. New guest on the show today. Very excited. Talk to Caleb Silver from Investopedia. He'll be on the show at 9. We'll have Patrick Donawilla from the Chart Report. He'll be on at 9:30. And in the meantime, the usual. Steve, JC, charts, opinions. We got the chat up and running. Good morning, everyone. What's going on? That's all I got to say. So let's go here.
All right. Good morning, guys. Are we really gonna talk about Strazza's feet?
Yeah, we could.
Is that really what we're doing here?
Do we need a photo of this?
I like where your head is at. So Strazza just got a foot massager.
Yeah,
because he's getting old, so he needs
No,
a foot massager.
but it's not even that. It's actually it's a foot sauna.
Excuse me.
Yeah.
Strazza just purchased a foot sauna.
Yeah.
Sorry, excuse my ignorance in the proper nomenclature for your new device. Not only does Strazza have a new foot sauna, he's got a new morning routine and all. Is that right, Strazza?
Yeah. So you could just slide this thing right under your desk. You put on the sauna first, heats up really fast. It gets super hot. Like you would think like a device like this maybe doesn't get hot enough. I don't know. The jets are a little bit weak, but it's great. You put a little bit of lavender essential oil and some Epsom salt in there.
Oh, wow.
My whole lower body is tingling right now. So I could sit there,
Wow.
read the morning news, go through my morning notes and emails while I'm foot sauning. And it's just a really nice way to start the day. Your feet, like your extremities are very important. That sends stuff through the rest of your body.
You hear this guy, Spencer? You hear this guy?
It's important. I'm really into like the health and wellness stuff.
Oh, are you?
Yeah.
Is that why you eat so many croquetas in the morning?
I just had pork belly for breakfast.
Speaking of health and wellness, why don't we talk about inflation and how much I'm loving it?
Speaking of health and wellness, I just want to say I'm going for a new personal record today. I haven't eaten since Sunday night, and usually I would eat after the show today, but I'm gonna go until tonight. I'm gonna go a full like 47. It won't be exactly 48 hours. It'll be like 47 hours. But who's counting?
47-hour fast. That's aggressive.
Yeah.
Right,
Well, I got my coffee. I got my tea. I should probably drink more water. But what are you gonna do? All right, let's talk markets.
Fine.
All right, let's do a quick little rundown this morning. Dow futures down 50 points. S&P futures down a little over 20 handles. That's about 40 basis points. You got the NASDAQ 100 futures down 70 basis points, about 120 points. Already gave back all of those gains from yesterday. That was fast. Bond futures up a little bit, slightly up this morning, up about 20 basis points on the 30-year bond futures, hanging in there above 118. Gold up about 30 basis points. Silver up about the same. Gold down 30 basis points. Silver down about the same. Copper down a little over 1%. Crude oil flat. Interesting relative strength there as the dollar absolutely ripping this morning. Volatility index hanging out around 14.5 as the U.S. 10-year yield hovers near 4.3%. Over in the old funny money, quite the bloodbath over in cryptocurrencies overnight. You've got Bitcoin down 4,000 points. That is about 6%, hanging in there around 63,500. You've got Ethereum down 230 points, hanging around near 3,300, down 7% on the day. Solana hanging out near 183, down 6% on the day, down 12 points. Total crypto market cap, Spencer Israel, all the way down to $2.33 trillion. And those are and that's the morning action.
I saw a headline yesterday on CNBC that Bitcoin is threatening to lose its reputation as a volatile asset. I didn't read the article, but I saw that headline and I chuckled to myself because that'll be the day, right?
Well, there was a time when cryptocurrencies actually were super just muted. There was no volatility at all. And Strazz's joke, and this is while treasury bonds were just going up and down like crazy. And Strazza was like, this crypto stuff isn't volatile enough for me. I'm going to start trading bonds. Right. And it was like a joke and it was funny. And it's one thing when Strazza says it or if I say it, but if a journalist says it, word's getting out. Right. Word's getting
Well,
out.
that was recently. That was like December, right? That was pretty recent. Or was it?
It was last year.
Last year.
Okay. All right.
Yeah.
So more concerning than the action in Bitcoin is just breadth in crypto. It's really
What's concerning about it
in recent weeks.
What's concerning about it?
I just things you need to watch, right? That's all.
Bitcoin's stuck below 70, so it's probably going to be stuck there for a while, right?
I'm not talking about Bitcoin.
Well, what I'm saying is if Bitcoin's going to be stuck below this overhead supply, things are going to be messy in a lot of other places, is my guess, as it should be.
Maybe.
Anyway, if Bitcoin's the S&P 500 and the S&P 500 is messy, then a lot of the stuff that moves with the S&P 500 is going to be messy. There's going to be some altcoins that are showing a lot of relative strength, a lot of altcoins that are making moves.
Sure,
but most likely further down the cap scale, right?
Sure, but there are also environments where breadth is actually improving beneath the surface, yet the indexes are masking it. All I'm saying is it's not that kind of a situation for crypto right now. In fact, there was weakness down the cap scale and beneath the surface before it showed up in Bitcoin and Ethereum just recently. Solana's just doing its own thing. It's down like 15% since yesterday, like in the past 24 hours. But that one was holding up by far the best. Solana, Avalanche, handful. But as you go down the cap scale, the alts are in some serious drawdowns depending on where you look.
Throw up slide 2 here. This seems to be the big story for me. Inflationary pressures remain elevated. You've got people out there talking about lower interest rates. I don't know what kind of drugs these people are on, or what kind of insane asylum they escaped, but I'm not seeing lower rates at all. Actually, the U.S. 10-year yield closed yesterday at the highest level since November. We are almost in April. When you hear people talking about lower rates, Strazza,
yeah,
what the hell are they talking about?
They're listening to the news. And
what kind of serial killer thinks that rates are going lower? Rates are going up every day. What are they looking at?
I don't think it's foolish to have come into this year with the general thought that rates would eventually be lower.
Okay, but maybe, but that was 3 months ago. Here we are, rates continuing to go up every day. People telling me that rates are going down. Like, seriously, you think that they're just you think they have mental problems, you think maybe? Or is it just because they're brainwashed because they watch too much basic television or something?
No, you know how it goes. It's a slow turn, these things, right? So it's moving in the direction that you're describing, from pretty much all the way out on one end, which was everybody was expecting eventual cuts. So new CNBC survey today, 100% of participants say no cut in March or May. 100%. First cut in June of 2024, we're at about 60%. And the year-end 2024 Fed funds rate, 4.5. So not much is what the market is now expecting. We came into the year, I think at one point, Fed fund futures were suggesting 5 cuts. So a Fed fund futures rate of 4.5, what's that? How many cuts is that? What are we at right now?
I'm not a bank. Why would I give a shit about Fed funds?
Well, you can trade them.
I can trade them. Have you ever once heard me trade Fed funds?
No, but you can if you wanted to.
You think anybody watching the show is trading Fed funds? I'm not a bank. I don't give a shit about the Fed funds. Why would I care? Why would anybody care about Fed funds out of curiosity?
Because they're important. To
banks?
To everybody. So that Fed funds rate implies 3 cuts by year end. First one in June, then 2 more. We'll see. So I think expectations continue to steadily move lower. But we'll see. If gasoline is going to break out of this base and inflation expectations are going to break out of this range, you would think maybe we get another hike, not cuts at all. So I'm with you. I hear you, buddy.
2-year yields, highest levels all year for those keeping track at home. 10-year
Great.
yields highest level since November. I mean, I don't know what kind of serial killer you need to be to think that rates are going down when it's literally the exact opposite. Look at that base in gasoline. Look at that base in gasoline. How many investors out there are positioned for higher gasoline prices? How many people later this year are going to be bitching because gas prices are so high, instead of celebrating the fact that gas prices are so high because they own so much of it? You
So
know, like that's kind of how I think through this. I think the pain point is investors mispositioned in too much tech, too much consumer discretionary, too much growth, not enough commodities. And they're going to be complaining about it instead of celebrating with us. That's how I see it.
JC gusta la gasolina.
That song is so annoying. Do you think that I am being insensitive, you think? Or do you think that my selfish thoughts on my own personal portfolio and not giving a shit about other people, do you think that's the right way to look at this?
I think you're I agree with the mentality. Maybe the way you kind of express it is a little brash.
Yeah. The fact that investors are not positioned, and that's where the pain point is, and there could potentially be a ton of pain for these people, and my intention is to profit from it as much as possible. You think that's brass instead of just keeping it real?
I think a lot of people still don't understand what you're talking about.
Well, when you say pain,
the average person, it's lost on them that they can actually invest in inflation.
Good.
That's
a good thing. The fact that investors don't even know that they can participate in this, I think, is even better. I think that's a further bullish catalyst.
This is what I'm talking about. It's that attitude.
Yeah. Well, there's pain in two different ways. There's pain in the wallet, pain in the portfolio.
That's right.
So I think you're totally right to not give a shit about pain in other people's portfolios because it's their portfolio, it's their problem, right? You have yours, right? You know, you could probably be a little more sensitive to pain in people's wallets, right?
Because that sucks, and you feel it too. Everybody feels it every day.
But my point is that pain is potential profit for the rest of us. So why wouldn't we just take advantage of their pain and profit from it?
I like the way Spencer's kind of spinning.
Why don't you don't think that it's valid to recognize that vulnerability and take advantage of that for our own profit?
But what you're missing is that the reason why these inflationary environments can be a little bit dangerous for the U.S. economy is because you're not in the vulnerable position that a lot of people are in, where inflation ticking up the way it has and historic rise in a few years can hurt to the point where it can have a bleed through impact where mortgages or rents stop getting paid, bills stop getting paid, right? Debt accumulates, and that can be driven by inflation. So I think you're being completely insensitive to that whole side of the story.
Also, to root for like higher gasoline prices, I don't know. I'm borrowing this take from Ben Carlson, but I agree with him when he says that gasoline prices are probably the biggest indicator for the vibes. Whatever the vibes are out there, they're driven primarily by gasoline prices because no other thing that we buy has their price in huge letters on the side of or numbers on the side of the road that you can see every day when you're driving, right?
That's not Ben Carlson's take. That's
that's fine. That's where I first heard it. Whatever. So credit to Ben or others. But
if I own a ton of gasoline and I'm overweight energy personally, why wouldn't I want those prices to go up if I own them?
You don't own gasoline futures.
I do not own gasoline futures. I own an ETF.
That would be a little. If you wanted to express that thesis, right? Like make the most direct bet on things that hurt people's pockets, and then you benefiting in your portfolio from that same trade. You go long gasoline futures. I don't think there's a cleaner way to express it.
What's the difference? What's the difference between housing prices going up? For example, I root for housing prices going up. That hurts other people because people can't afford to buy houses. right?
That's different.
But
Yeah,
I'm
but
rooting for a
how
higher.
often are you tapping into that, right?
What?
I like what Carter said. You're talking about how the higher gas prices can lead to your to help your portfolio. He's going the other way, right? The portfolio profits go straight into the pump, right? So it's flipped.
Well, I don't go anywhere because I have 3 kids,
Right, that's true.
3-year-old and 2 1-year-olds. So like, where do I go? I go to the butcher.
Yeah.
I fill my tank like once every few months. You know what I mean? So like for me, gasoline is just not not a material expense in my life. My
Well,
wife's
like
shopping
likewise.
habits, that's one. You
It's a
know, my
what you
sushi
don't
habit, my
fine.
wine habit. Like I have other problems.
This is an input, one of the highest costs of doing business for a lot of small businesses. Gasoline.
Now, let's also remember something that I think a lot of us are failing to acknowledge, and maybe a lot of listeners out there, is that we have no control over the price of gasoline. We have no control over inflation. We have no control over interest rates. It's our job as investors to recognize those trends and profit from them or not. We live in this country called America, where we have the right to invest in things or choose not to invest in things. And it's a beautiful thing. And if gasoline prices are rising and you're not profiting from it and you're an investor with cash, that's on you. That's your bad. I understand that a lot of people might not be able to afford to invest in anything. And if you are one of those people, then you probably shouldn't be watching the show. Maybe go maybe make more money, right? So if you're listening to this conversation, if you were in last night's conference call, if you care at all about what we have to say, it's because you have money to put to work, right? You're putting money to work. And if gasoline prices triple from here and you're complaining about it instead of profiting from it, that I think that's on you. I mean, that's how I look at it. Or forget you. That's on me. Like I'm like selfishly, like if I am not smiling when I'm filling up my gas tank and it's 3 times more expensive than it is today, if I'm not happy about that, then that's on me. That's my bad.
This is how much control we all have on the price of gasoline.
0.0.
Just
Mr. Blutarski, how did you do that?
we don't have any control. It's just
That's great.
we don't have it. So
Shout out Spencer Israel working behind the scenes, working hard getting the Animal House quotes.
I got some new sound bites. I did some stuff yesterday.
Look at that, Spencer Israel. Somebody's working. See
Yeah.
that, Strazza? That's what's called working.
Yeah,
I
that's
do some
I love
stuff.
it. I love the sounds. We got to work my board out soon.
We got a few more. There's more where that came from.
So I think gasoline is the standout that we all think of, but really food inflation has been crazy. Food inflation's been really nuts.
All right, let's move on. Because you guys are boring. Can we talk about sentiment? Throw up the new slide 3 here, Spencer. This is great. I love that Grant does this. I don't know.
This was my favorite chart last night.
Wow.
Yeah. I like this one quite a lot. Oh wait, no, it was the I think the one before. Yeah, it was similar to this. I mean, it may have been this one. I think in more than one. But
All right, so here we're looking at different sentiment gauges. We're looking at put call ratios. We're looking at the volatility index. We're looking at individuals. We're looking at newsletter writers. We're looking at active investment managers. In the blue squares are current market sentiment. The gray triangles are where they were a month ago. So essentially, as optimistic and as overly bullish as the market was a month ago, across the board, the market is either more bullish or just as bullish. So needless to say, sentiment is getting frothy, as we call it. You could take a look at. Why don't we just take a look at the newsletter writers? So here, throw up new slide 4 there, Spencer. So these are newsletter writers. These are the guys that we're telling you to, and they're mostly guys. I mean, I know there's probably some females around there, but it's mostly dudes. And they were telling you to sell stocks in the summer and the fall of 22 when we were right here buying them very aggressively. So, in fact, now is when they're telling you to buy stocks, right? They're the most bullish, these newsletter writers, the most bullish, going back years, actually since last time the market had a major correction. That's the last time they were this bullish. This is a good one, Spencer, because this data goes back to the 1960s. And the guy, Investors Intelligence, started surveying what all the newsletters were doing because, in his opinion, if the newsletter writers were all bullish, that would probably be a good time to buy stocks because they're the smart guys. He very quickly realized that not only was that not a good idea, it was actually the opposite. When the newsletter writers were all telling you to buy stocks, you wanted to be selling them. And when the newsletter writers were telling you to sell stocks, it was a great time to be buying them. Kudos to the guy for fixing his mistake. Like, he went in there with one thesis and he came out of there very quickly with the exact opposite. So kudos to the guy. I forget his name. It's like 2 letters, like R.W., right? Thompson or something like that. This is in the 1960s. So kudos to this guy. So the data goes back a long time, and these guys are super, super bullish. Also, I was watching, get this, Spencer Israel, I was watching Bloomberg television this morning. I kid you not. For some reason, my TV, like before, it was like these like weird soap operas that would turn on. Now Bloomberg comes on. It's not even like cable or anything like that. It's the smart TV.
It's the automatic stuff. I get ads. How come I don't get Bloomberg? I get ads.
It just started like a few weeks ago. Before it was like weird sitcom, like weird like drama, like soap operas. And now Bloomberg might probably pays for that, right? They'll pay Samsung or whoever it is, right? Or LG, whatever TV I have, right? I don't know. I'm making this up, but
I don't know.
Somehow Bloomberg's coming up every morning. So my daughter was kind of being a little brat this morning, and she didn't want to, I don't know, she was being a brat. So I was like, fine, we're going to leave daddy shows. She hates daddy shows. So Bloomberg would be considered daddy shows. So I just left it on. So I was actually watching, and then I see that the Bank of America Fund Manager Survey came out. So look at this. I'm watching Bloomberg. I actually took a picture. See that? I took a picture of the Bloomberg.
Oh, yeah.
And it says risk appetite, the highest since November of 21. Global growth expectations hit 2-year highs. Stock allocation hits 2-year highs. Big rotation into Europe, EM, and financials. Really interesting. Very, very optimistic view from the Fund Manager Survey, according to Bloomberg this morning. How about that, JC? Watching Fin TV.
For what it's worth, you agree with the Fund Manager Survey in terms of greatest tail risk. It's the return of inflation. Inflation is seen as the greatest tail risk, according to the Fund Manager Survey. It hasn't been the greatest tail risk since the middle of last year. And
I mean, could be a risk for some people. Could be a profit center for some of us others.
Okay, sure. Maybe you don't see it as a risk like they do, but you're in the same frame of mind as them. So,
here, let's throw up. Here's a good one. So throw up these next ones here. Throw up 5 through 8. So here, what we're looking at is the S&P 500 new highs list. And then what you'll notice, so from left to right, you're looking at 10-day highs, 20-day highs, 63-day highs, which is about a quarter, 126-day highs, which is about 6 months, and 252-day highs, which is a year, right? 52 weeks. And then on the over on the y-axis, you have all the different sectors. Notice that the energy stocks are the ones that are making new highs. Not communications, not consumer discretionary, certainly not technology. None of those stocks are making new highs. Half the energy stocks made new 10-day highs. Half the energy stocks in the S&P 500 made new 1-month highs. Almost half the energy stocks in the S&P 500 made new 3-month highs. And you could go down the cap scale to the mid caps and the small caps, Spencer. Here's the S&P 400 mid caps. Same thing. Energy stocks are the ones dominating. Certainly not technology, as 0% of mid-cap technology stocks are making new highs. And go even down to small caps. You can see technology continuing to struggle greatly. Communications as well. What are the ones that are making new highs? Financials, right? Small cap industrials kind of sprinkled in there. That's probably not a surprise, but energy is really the one. And then just go down one more so you can see the U.S. 10-year yield going out yesterday at the highest level since November. Interest rates are going lower as they go up every day. Go to the next chart, Spencer. So this is people keep telling me every day that interest rates are going lower. Meanwhile, they go up every day. Crude oil prices obviously making new multi-month highs as well. So that's what I'm seeing. We talked about it yesterday on the conference call. Spencer, drop the link if anybody wants to catch last night's call, download all the slides. How many slides did we have? 153 charts. Not a new record. Not a new record. Probably about par for the course, right, Strazza? Par for the course.
Yeah, pretty standard. Listen, go back to the new highs table quick. This is that cyclical value rotation. It's not just materials and energy, right? Look at what else stands out here. Industrials.
Financials. Well, maybe not in this chart,
Oh,
but in the large
sounds
caps,
different.
you'll see it more.
Yeah. And it's different when you go down the cap scale.
Mm-hmm.
Let's look at these growth value ratios. They look very different, whether we're talking about large or small.
Yeah, like large cap technology hasn't gotten slaughtered like small cap technology has, right?
Look at the new highs difference between just financials, large here. Very good. That's solid, right? High teens, mid teens. Now go to the small caps. Almost non-existent.
Yeah, because they're regional banks, dude.
I know.
And regional banks suck.
I know
Regional
why.
banks keep going down every day. You know, they're down near multi-month lows, like still.
They're not going to stay forever.
Small caps down again yesterday. Micro caps down 1.16% yesterday in the micro caps. None of those quote unquote breakouts held. You know, people telling me that small cap breadth was improving. Are you serious? What kind of serial killer do you need to be to think that small cap breadth was improving? No, it wasn't.
We have the data.
It never was.
It absolutely was.
I have the data too, by the way. It definitely has
I
not.
don't know why you're lying. It's not going to get back to the December.
When has small cap breadth improved this year? It's been
improving
making fewer highs all year, and now we're getting an expansion to new lows. At what point have we gotten breadth
Thank
expansion?
God I have this chart handy.
Not a single small cap sector has gotten overbought in 2024. Not one.
Oh,
Like maybe if one or two, maybe we could talk about some improvement. Not a single small cap sector has reached overbought conditions.
That's true, but that's not breadth.
In the year of our Lord, 2024. How is that not breadth?
We're talking about breadth.
Yes, we are talking about breadth.
Those are indexes. Those are sector indexes.
Yes, that's right, which is part of the breadth conversation. Don't cherry pick data points when it suits you. Bro, not a single small cap sector is in a bullish momentum regime, and you're telling me that small cap breadth is improving? Like, come on, dude.
Yeah, new highs were increasing all January into mid-February. And then we saw the deteroration start.
No, not a single small cap sector. Are small cap industrials above those former highs? I think they might be. There's one sector. There's one small cap sector that it's above the December highs. One. And that's industrials.
The data should be objective. You're right, Muna. I don't know how we get here.
What? It's facts. Facts only. It's facts only.
I know.
There's one sector that's above those former highs. One. Which, by the way, for the record, shows very impressive out of industrials. Not for nothing. Right, Strazza? Which is, right?
Mm-hmm.
You don't think that's impressive that there's only one sector and that's industrials and everything else is getting killed?
Small cap materials. How about them?
Makes sense. Rotation to small cap materials as inflationary pressures increase and gold and copper are breaking out. Yeah, that sounds right.
New all-time highs, what, last week?
Yeah, that shouldn't be surprising. What's really interesting is the strength out of small cap materials in particular, because as you know, there aren't a lot of mega cap material stocks, right?
So you like this Reliance Steel?
Do I like the Reliance Steel?
Yeah.
Sure.
You into it?
Yeah. I like the bull call spread better than the common.
Yeah. That's what
I like the bull call spread we put on yesterday.
Yeah, we did on the Flow Show. It's an expensive stock though.
Expensive how?
I don't like these high price stocks because like the whole position to put on the call spread, it costs like $1,000 a lot. So
now all of a sudden you can't afford $1,000. Too many put spas.
No, it skews like your account, right? When you have like a large capital outlay for one position and one that's, I don't know, a fifth of the size for another one, it just fucks things up for me. I don't like it.
I got one more thing I want to mention quickly before we bring in the legend that is Caleb Silver, the world's most interesting man. For those who don't know that, Spencer, can you throw up the relic, the yellow relic?
Oh, okay. Hey,
there it is. So there's gold making new all-time highs. Look at that base. Shout out William O'Neill. potentially the greatest cup and handle bullish formation of all time. The year that he passes would be appropriate. Shout out William O'Neill. But I want to mention that gold making new all-time highs shouldn't be a surprise. It was, in my opinion, it was really only a matter of when, not an if. Start scrolling down to gold priced in some of these other currencies, as you guys can see. So gold price in dollars making new highs. Gold price in euro had already been making new highs. Keep going, Spencer. Your gold price in British pounds making new highs. Gold price in Japanese yen. To be fair, anything priced in Japanese yen has been doing well, but gold as well. Gold price in Indian rupee making new highs. Keep going. And then here's a laundry list of others. Gold price in Aussie, gold price in CAD, gold price in Kiwi, gold price in Norwegian krone, all making new all-time highs across the board. But in my opinion, it was really only a matter of time before you saw it in dollars. Now zoom in on the next one. So there it is. So that's a short-term look at what we're seeing in gold. Price in US dollars, 2,500 next, 3,000 after that, right? I think there's a lot of potential here. As we like to say, the bigger the base, the higher in space. And this is a perfect example as to why. I will tell you a lot of things, looking at a lot of gold miners, the big ones suck, like Newmont Mining, Barrick, like they look terrible.
Terrible.
So you got to go down the cap scale to find something in the gold mining space, at least for right now, that is already working. And we went over it last night. So I know Spencer dropped the link. If you haven't watched last night's video, highly encourage you to do so. It was kind of a big deal. People were there. There were many leather-bound books.
Rich mahogany. All right. I want to bring on.
Please.
Go for it.
Mr. Silver?
Please.
Let's do it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Caleb Silver in the house. What's up, my man?
It is what a pleasure to be here on Stock Market TV. I never thought I would make it, but here I am. I got the sun shining in. I'm ready to go. You guys have a great show going, and I'm just honored to be a part of it.
I love the Steve Jobs situation you got going there,
I
Caleb.
went full jobs today. I did not expect the sun, but hey, the season's turning.
Yeah.
Full jobs. I got the full gray suit going. Got some TV later today, but this is my big debut, so I'm excited.
So, for those who don't know, Caleb Silver, the most interesting man in the world. Just a few fun facts: makes the best guacamole east side of the Mississippi. Makes skateboards to work every day. Longboard, is that the proper nomenclature?
That's right.
Longboard.
That's right. Longboard only for
We'll
me.
pretend I do. Every time I talk, randomly owns a restaurant in the Bay Area. Every time I hang out with Caleb, I learn a new fun fact about him. Just got back from Uruguay, drinking some Tanat down there. How was your trip? Was that good?
It was great, and I totally took your recommendation. Had a lot of Tanat. Had it with all kinds of different dishes. It was the perfect call. Uruguay this time of year is just glorious because not all the tourists are there. My wife's from down there. So good food, good family, good parrilla, good asado. It was just a good trip and good to be back.
Guys, if you're listening out there, Uruguayan Tanat. Tanat is a Rhone varietal from the south of France, but the folks down in Uruguay are killing it with the Tanat. So if you're out there and you're not drinking Uruguayan Tanat, I don't know, your life has gone horribly wrong. Get involved. It is delicious. They are crushing it. A little New World Tanat, no big deal. Caleb Silver, you are a very popular man. You know many folks. You're always having smart conversations. Can you just tell the folks from what perspective you come in? Coming from Investopedia and everything like that, how you think about things.
Yeah, thank you. And I do know a lot of people because I'm old, but I have a lot of good friends, and I'm lucky to count you and your team among them. I am the editor-in-chief of Investopedia. If you don't know Investopedia, you probably haven't been on the internet, because Investopedia has been on the internet for 25 years. We're going to have our 25th birthday this summer. We'll probably have it at Future Proof. If you're going to be down there, come party with us. I know you'll be there. So Investopedia has been around since 1999, answering people's questions about money, full stop. It started out as a financial dictionary or an encyclopedia, hence the name, which is still a great name, turned into more test prep for people who wanted to get their Series 6 or their Series exams to get into the capital markets. And then we've expanded it over the years. It's passed through a bunch of different hands, but now we're a part of the Dotdash Meredith brand of publishers. We have People Magazine in there, Real Simple, In Style, Food and Wine, which is why I'm always asking you for wine recommendations, Travel and Leisure. We're a part of that family, which is owned by IAC, Interactive Corp. I've been there for 8+ years, and my job, the way I see it, I'm the editor-in-chief, but I don't run all the editorial on the set. We have so many good editors and a huge team. But my job is to explain money to people. So I do it through my podcast, the Investopedia Express. I go on TV a lot. I'll be on CNBC later tonight talking about our latest sentiment survey. I go on a lot of the networks just to explain money and sort of break things down for people, but also do some columns for the site, help with some of the newsletters. I'm just trying to be the voice of the educated investor, and we're constantly learning, which is why I love talking to you so much, JC.
Caleb, I got to tell you, I mean, I was using Investopedia when I was in college. I was using Investopedia early in my career. The first few years, I found myself on that site constantly looking up random words that I didn't know what they were. I would hear things, right? And then come full circle, decades later, I find myself, creating the technical analysis course for Investopedia, writing columns for Investopedia. Like, I mean, that's kind of like a surreal moment for me. Kind of coming full circle, learning so much from Investopedia, then I become the contributor. It's like, wow.
Yeah.
It's come a long way.
And for me, when I first, met you, I think we met through Josh Brown years and years ago. He said, you got to get to know JC. As soon as I met you, I said, we need JC to help us teach technical analysis and the magic of charting to our readers. And you did it. Your course is one of the most popular on the Investopedia Academy. Every time you come on my podcast, we got a big spike in listeners. They come for the charts, but they stay for the wine, JC.
Dude, there's some pictures out there, like in the Investopedia, of like me with like makeup on. It looks terrible. It's like I cringe every time. Remember that lady was putting on all that makeup on me? I didn't even look at myself afterwards. I look ridiculous.
Nah, you crushed it. You look good.
Well, at least somebody thinks so. And cringe.
Jeff Goldblum comment. I'm getting this lately from people. I think it's the turtleneck, but maybe it's the glasses, and maybe it's just we're men from a certain part of the world, but I've been getting that a lot lately. You know what? I'm okay with it. He's a lot taller than.
What are you getting? What are you getting?
But
what is it that you're getting?
Jeff Goldblum. People are saying in your comments that I look. They're waiting
Jeff
for
Goldblum.
He's the guy from Jurassic Park. He's the Fly. He's the Apartments.com spokesperson. But it's all right. I get a lot of people. I get a lot of you look likes, and I think that's all right.
Oh, Jeff Goldblum. I know that guy.
Yeah.
Hey, from Twister. Wasn't he like in Twister or something? I don't know.
He was definitely in the Jurassic Park movies, but he's also
yeah. I know that guy. That's funny.
I'll take
that's probably a compliment. That's probably a compliment. So what are you thinking out there, Caleb? I'd love to hear your thoughts. I'm seeing inflationary pressures higher. I'm seeing energy, really moving higher. I got people telling me interest rates are going down, and then I look at what interest rates are doing, and they're doing the exact opposite. They keep going up. I think personally that a lot of investors are just not positioned to take advantage of higher inflation. Most investors are not positioned to take advantage of, gas prices tripling or more from here. I think investors are still, leaning too much on tech and growth and consumer discretionary, and just are not positioned for that major rotation that we're seeing happening all year so far this year. And I think that that's where the pain lies. And call me selfish. I'm an investor, so I'm being selfish for my own. I think there's a lot of opportunity to take advantage of the mispositioning. I think it could cause a lot of pain for people that are positioned improperly. But from that comes a ton of opportunity for those who are willing to take advantage of it. That's how I'm seeing the world right now. I'd love to hear any thoughts on all that.
Yeah, I don't disagree with anything you're saying. I read your notes. You've been talking about it. We were talking about it on the show a month ago about the fact that, hey, inflation's not over. How can commodities and the CRB commodity index be, outperforming the NASDAQ 100 at this time of year? A lot of people don't realize that. When I look at our readers who are individual investors, many of them self-directed, some of them work with advisors, but a lot of them are passive or active. They're actively passive in that they have a lot of index funds, they have a lot of ETFs, but they also have their favorite stocks. And their favorite stocks, and we've been surveying them for the last 5 years on what they hold, are the same big home cooking tech stocks that you just mentioned. So I'm looking at the list right now. We just got the latest results. It's Apple, it's Microsoft, it's NVIDIA, it's Alphabet, Amazon, AMD, ExxonMobil back in there. So somebody's waking up to the fact that higher oil prices are here. Verizon, Pfizer, and JP Morgan Chase. So sounds like the market. And that's kind of what they stick with. Occasionally, you'll see them go out on the edge, whether it's AI, whether it's crypto, or they'll get back in their shell like they have been prior to the beginning of this year, where everybody was hiding out in CDs and cash. A lot of our readers, that's where they wanted to put their money. They felt better, even though there was a big bull market going on. But when they come back to stocks, they come back to home cooking.
You mentioned something briefly about passive investing, and the truth is there's really no such thing as passive investing because you are either actively making the decisions for your portfolio or you're handing those decisions to a group, whether it be the Standard & Poor's or whether it be the NASDAQ people or whatever, but they are actively managing that portfolio. So there's no such thing as passive investing. Now, when you look at the three, in my opinion, the three most popular, investments, passive or whatever. You look at the S&P 500, you look at the Dow Jones Industrial Average, the NASDAQ 100, three very popular indexes. What you'll notice is that only 3% of the S&P 500 is in energy, 2% is in materials. When you look at the Dow, it's even less. You're looking down more towards 2% of energy, no materials. You look at the NASDAQ, you have no energy, you have no materials. So for a lot of investors, if you're going to stick with that like strategy of just being long the market, you're not getting any energy exposure at all. So as investors, we need to then add another layer on top of that, which is just focused on energy or commodities in general, if you want to include gold or base metals. But, having an additional sleeve of commodities, I think is important. And again, not just necessarily right now, but just in general, something to think about for investors. And they're just not doing it, Caleb.
You're right. But a lot of investors, and I would say folks, I'm in my young 50s, 53 or so, but a lot of investors, and that's kind of the age group on Investopedia, a little bit younger, they came of age in a time where it only made sense to be long tech. It only made sense, to be long growth. And they've been through this since, maybe 2008. Maybe they came into the market like I did a little bit around 1988, 1999. They watched what happened, and then they've been right all along because that's just been the environment, even though there have been opportunities and sector rotations throughout that where they could have and should have shifted. A lot of them just don't. They just know this narrative. But as you explained so thoroughly in your notes and in your webinars, that narrative's changed, and it's changed a lot. And individual investors, by and large, a lot of self-directed ones, not the people who are, the brown belt and black belts who are trading with you and trading their portfolio on a regular basis. They don't move their money a lot. They don't rotate. They even if they rebalance, we're lucky, but most of the time they just stay with what has worked for them for the past 20 odd years. And until something major makes them change that, they won't.
Yeah, and by the time they're starting to shift, it's probably a little bit too late.
Yeah.
I think there's a lot of vulnerability there. And where it's our job as investors, or at least I think of my job as an investor, to identify those pain points, identify where investors are most vulnerable. And when that unwind begins, it tends to go on for quite some time, tends to last longer than most would expect, particularly because positioning is so skewed in one direction. And I think you said it with your own Investopedia readers. You're looking at the Bank of America fund manager survey, you're seeing the same thing. We look at a lot of different sentiment gauges, you're seeing the same thing. Investors just don't have that exposure. Now, let me ask you this, Caleb, because you look great, by the way. For 53, you look fantastic.
Thank you.
Great.
Good luck.
Quite the gentleman. You're looking good. You look younger. Actually, I think Perlman and I were talking about it the other day. You look younger every time we see you. You started investing maybe a decade or so before me, maybe a little bit more than that. I started in the early 2000s, a little over 20 years ago. So the way I learned it was that there were three asset classes: stocks, bonds, and commodities, right? That's how I learned it. And I understand that for a decade or so, after like 2011, 2012, for a decade, commodities just struggled. They underperformed. It was all tech. It was all growth. It was all U.S. stocks. I get that. And I get that a lot of investors have only been around for that period and weren't around before that. When you started learning about the market in the 90s, were there three asset classes then too? Or was it just two?
There was AOL, there was Yahoo, there was Lycos, right? There, we were chasing internet stocks, and that's how I really got into the business as a business journalist. Started producing and working for Bloomberg Television in the heat of the internet bubble. That's the frenzy, and the fact that financial media was really just being born at that time. If you think about BNN becoming CNBC, if you think about Bloomberg becoming Bloomberg TV and the global network that it is today, Fox Business eventually launching, this was the beginning. And as you know it, you write about it all the time. Stocks are sexier. Mania stocks are even sexier than that. As soon as you see it on the cover of Pick Your Financial News magazine, the mania is over, right? So we're poorly timed. So yeah, I grew up at Bloomberg, though, working at Bloomberg. So I did know, because we had to take Bloomberg University, that there was a world of treasuries that I could be invested in, corporate bonds I could be invested in, stocks I could be invested in, not so much commodities, because, I was a child of the 70s and 80s, and that was not the place to be. But it was really stocks and bonds. But it was always the mania that got people's attention, just like it is now. JC, things don't change, and the media and the herd is usually late to that party, as you well know.
I love the fact that you brought up the media and your experience there. We have, I guess, different experiences. Like, you've actually worked for these media companies. I have been, I guess, a contributor at a lot of these, been on all of those networks that you mentioned over the years, and kind of looked at things, as a contributor, and kind of like looked around and everything like that. There are some parts of those media companies that are great. There are some parts that are terrible. Right. And, they're all different in their own ways. How do you think, since you got started originally in the 90s to here we are in 2024, how do you think financial media has evolved for the better or for the worse, depending on how you look at it? You don't need to mention any names, kind of just in general.
Yeah.
And then as an investor who wants to be more informed, right? In my experience, a lot of these media outlets don't make you more informed. They get you more confused than anything else, right? So if you're an investor and you want to be more informed about what's going on in the market from a day-to-day basis, from a week-over-week basis, like, how do you think about those things? So the evolution, and then what are some of the best practices these days?
Yeah. Well, one thing hasn't changed, and that's that a lot of the financial news networks, and I've worked at Bloomberg before, and I go on CNBC quite a bit. I go on Fox Biz from time to time as well. They treat the market and the trading day like a sports event, like a football game. And that's because it works, right? You get your pregame, you got your kickoff, you get your halftime show, you get your final hour, and then you get your postgame, right? That model works on television. Our brains accept that, right? But they treat it like we're all trading intraday, and like these moves actually matter to individual investors who, are just thinking about their 401ks, or maybe they have a little portfolio that they're running. They're not active traders like your audience. So they treat it like we're supposed to do something about it, but really we're actually not supposed to do anything about it, because we're not minding our portfolios that closely. One thing that they become really good at is just speed, right? Information travels a lot faster. They become a lot faster at reacting to it, deciphering it, putting it back out there for us. But there is this breathlessness that you see in financial media, and that's because, an hour of television is trapped into 42 minutes. If you think about commercials and promos, where they're just trying to keep you from turning. And that means what you see on the crawl, what you see in the banners and the lower thirds, that's the thing that they're trying to get you to stop flicking channels around, because they're getting your attention. And because a lot of people, I just gave you the top 10 list of what our investors hold. It's the stock market. They'll go through that list and they'll be like, how do we take apart NVIDIA today, day 77 in a row of talking about NVIDIA. NVIDIA is getting a lot of attention, great company, but once they get a bone in their mouth, they don't let go until they feel like the audience lets go. And sometimes that's a self-fulfilling prophecy. So they overdo it. And when you talk about TV financial news, when you look at, radio or podcasting, which has become this entire thing where I have learned so much, whether it's, listening to Barry Ritholtz and the guys at the Compound, or a lot of our friends that have really good podcasts. You can learn so much because it's a longer form conversation.
The Investopedia Express.
Right. The Investopedia Express. It's branched out. So financial media, and when I'm thinking about television is the show. It's showtime. But when I'm thinking about what investors can consume today, there's a wide breadth of things. And there are people out there, and you're one of them, but just talking about the Compound guys and others that have audiences that are far larger than the TV networks. And those are the things being taken seriously by investors who want to get smarter. That's a positive.
Yeah, I think I read recently over 30% of people get their financial information on YouTube. That's crazy.
That's crazy. But I know I have friends that have YouTube shows that are far larger than an average hourly audience on the TV network right now. The model has changed, and a lot of people are getting their information for good or for bad. We're on YouTube right now. Hopefully people are learning something.
That's right. The old saying, I think it was Walter Deemer and John Bollinger used to say, watch CNBC like the pros. And then, if you ever watch CNBC like the pros, the pros watch it on mute, right? Because they have it up like in the corner. And if you've ever been on a trading floor, you see that. You see like the business channels on mute. And then like Walter Deemer would go on TV and say, like, he would put on a sign, say, turn the volume up when he got on TV. You know what I mean? Like, this is a long time ago, which is hysterical, right?
That's so good. But that's
But
true.
these days, what's that?
That's true. It's passive viewing for a lot of
Yeah.
people on trading floors and bars, in gyms. It's on.
But then hold on. So if that's the way things have been traditionally, where the pros watch financial television on mute or have it on, the reason is my understanding is because they're looking for breaking news, right? They just want to make sure that they're, up to speed if news is breaking. But
Right.
these days, if you curate your Twitter feed, for example, properly, isn't that just as good, if not better?
I think it's better. I learned so much from Twitter, X, whatever you want to call it. FinTwit has changed my life as an investor, as a journalist, right? If you're going to take everything away from me, leave that at least, because at least FinTwit is still this place where we can have fun, but do a ton of educational sharing. I learned from you. I learned from so many people. I follow the people you follow, and I follow the people that they follow. And that has really allowed me to curate a feed that I think makes me a smarter investor and a smarter educator. So thank God that's still there, and it's still what it is, because that started cool and it's still cool as far as I'm concerned.
Dude, that started as happy hours in Soho back in the day, during the financial crisis, and look what it's become today. And you travel around the world, and as I have over the years, and I can go to basically any city on earth, and I have friends there because of the community that we've been a part of for so long, which is really, really cool. Caleb, why don't you let's pivot back to Investopedia before you run. Why don't you tell the folks, how they can use Investopedia, how they should use Investopedia. I'm old school, so I know it very well. Like I said, I used to use it in college. I used it early in my career. I ultimately became a contributor to Investopedia, which is hilarious. But for somebody who might, the kids these days, some of them, they don't know. Why don't you tell them what are some of the best uses?
Well, thanks, JC. Obviously, our dictionary, we have like 12 or 13,000 financial terms. And in those terms, we have a lot of charts and patterns. And some of those articles I know you've reviewed or written yourself. So we have pretty much, not all, but most of the important charts and patterns you should be following. If you're thinking about technical analysis, we have great explainers on fundamental analysis. The most popular part of our site, believe it or not, is not the dictionary, even though that gets a lot of readers every single day. It's our stock market simulator. So for folks that haven't even started trading yet, or haven't even opened their first brokerage account, the stock simulator Investopedia is free. It's a free and easy way to learn how to trade and build a portfolio and do research on companies or look at their price patterns. We use TradingView with that, and I know that they're pretty good for folks who want to get into technical analysis. So the stock market simulator for young people in your life, or people who are just getting into the market, great place to learn and then graduate onto a brokerage platform of your own. Also, the podcast, the Investopedia Express, where I have smart people on every week like you. Thank you very much. That's out every Monday, and that starts with a little finance freestyle. Unfortunately, I can't stop myself, but that's the way I am.
Dude, you're out of control with these freestyles.
I got to stop. I know. Eventually I'll stop.
You're out of control. I'm into it. For the record, I'm into it.
Okay. Thank you.
You're very talented, by the way. I could never do that. First of all, and you got balls of steel for actually putting it out there. I mean,
those are silver, but thank you. So there's that. And there's also what we call journeys. And the thing, I don't want to go too deep into this, but when you think about how people use Investopedia or come to us, a lot of people do it through search. They have an intent. They're trying to figure something out. A very popular question we get is, how do I invest $10,000? Whether they just got it through, somebody passed it down through an estate, a gift, a raise, whatever. We get that question all the time. Now, the answer for you is very different for the answer for me, is very different from all of your listeners. We're all in different life stages. So that question needs nuance. We create journeys on our site that help you get to the answer that you need, because like what I would do with 10,000 is different from what other people would do with 10,000. So we want to help people get further down that path. So journeys around that, journeys around home buying, journeys around how do I start options trading, even advanced options trading. We have all of that there. And we also have the Academy where we have some courses, including JC's Technical Analysis 1 and 2, that are two of our most popular courses. If you want a video-led learning environment by experts like JC, check out the Academy. So we are here for you. We've been around for 25 years. Hopefully we'll be around another 25 years, and delighted to be able to be on Stock Market TV with you, and glad to call you and your team a friend, JC.
Dude, you are the man. Caleb Silver.
Can I just add?
The world's most interesting man.
Can I add, Caleb? When I was in 8th grade, my dad signed me up for 2 emails: the Merriam-Webster Word of the Day and the Investopedia Word of the Day. This is like 20 years ago.
Yep. Good father right there. Good
right?
father.
And both those emails accumulated in my inbox unread for probably about a year. And then about a year into it, I thought, all right, let me just start reading them. I quickly gave up on the Merriam-Webster one, but the Investopedia one I stuck with, and I was reading that. I read that every day, all through high school, through college. And that email like began my education. So
that's awesome. Term of the Day, our most popular newsletter. That's about 15, 20 years old. You can subscribe to that on our website. The Term of the Day. There's the Chart Advisor that your team at All Star Charts used to run for us. That's a technical analysis one. We partner with the CMT on that. That's a daily newsletter as well. So I forgot to mention the newsletters, and then the Investopedia dailies, which are just like news briefs. But thank you, Spencer, for mentioning that.
Yeah.
It's probably our most popular thing, and that's what we're known for. And we love the fact that we're still around, and people think of us when they see us on the internet or they see me walking around. They always thank us and they trust us.
Also, Caleb, those terms of the day tend to be timely, not always, because not everything can be timely, but a lot of, sort of new words based on market. So I don't know who runs that, but they do a great job at sort of making the terms of the day kind of within the framework of what's happening around the world.
Yeah.
It's cool.
I appreciate that. We put some effort into that. Like Friday was triple witching for obvious reasons, but we want to be on time.
Good example.
There you go.
Love it. Caleb, you're the man, bro. Drinks in New York, in the city soon.
Absolutely. Thank you. And thanks so much for having me. I really love what you guys are doing.
You got it. Caleb Silver. Dude, have you heard his raps in his podcast at the beginning of his podcast?
Admittedly, no, I have not.
Dude, they are next level. Like he literally raps at the beginning of every podcast. Like rap, like that rhyme and have to do with what the market is doing. Like he's out of control.
That's fun. That's fun. I'm super into that stuff. I love, writing making up my own words to songs. So that's fun.
Some of his raps are really, really good. Some of them are really, really bad.
Yeah. Well,
but
it's like all be winners, right?
But it's like so bad and cheesy that it's good in some cases. But man, he's talented. Like that's not easy to do. Good for him.
Anybody who longboards to work is good in my book. All right, well, let's do a couple news headlines here, and then we can get back to the charts and talk about Hot Corner. We should probably talk about the dollar yen a little bit. Bank of Japan doing what they said they would do, or what they hinted at they would do. They have finally ended the era of negative interest rates. They have moved their target for short-term rates up to a range of 0% to 0.1%. It's their first rate increase since 2007. And negative interest rates over. Not a surprise. You can see the reaction in the market, treating it as such, as not a surprise. But probably just worth mentioning. And I think we have that dollar. Yeah, I hopped on. Every day I go to a variety of sources to see what's like trending out there, and one of them had the dollar yen as like the 5th trending search today. I was dollar yen trending in what world? But here we are. So there's the chart, and I just wanted to mention that. I don't know if you guys have thoughts, but
it's a big move, and I mean, this chart looks like it's ready to break out.
I got to see it.
I wouldn't want to trade this thing. It's gotten so weird.
I mean, listen, the one thing we know that the yen is good at is going down.
What do we say about emerging market? This isn't your parents' Japanese yen.
This is not your parents' Japanese yen. It's a good way to look at it.
Yeah.
Yeah.
All right. Do we have the Unilever chart handy? Unilever is bearish on ice cream. They are
So
going
glad
to.
we're doing this one.
They're spinning off their ice cream division. I did not realize they had.
You took the words right out of my mouth. I didn't know Unilever had
Really?
a.
I knew they owned Ben and Jerry's. I did
That was
not.
Do they?
Yes.
Yes, I did
I
not
didn't know
realize
that.
they also own Breyers, Klondike, Magnum, Popsicle. They own a lot of ice cream.
Wow, I had no idea.
Yeah,
What's the best of all those that you just named?
Ben and Jerry's.
Ben and Jerry's is the worst for you and therefore the best to eat. Right?
Ben and Jerry's is like candy with ice cream. I'm more of a purist. Klondike is classic, man. Klondike is classic.
Yeah. So anyway,
but is this going to be a separately traded ice cream stock? Because I'm excited for that.
It appears it very well might.
Wow, an ice cream pure play. Right,
Yeah.
I'm into it.
It's either going to be a sale or a spin off into a separate company that would trade.
Do we know yet? Like they probably announced some sort of tentative plans, right? It sounds like a public spinoff.
No, the plan is to separate. That's the plan.
And they don't know where it's going and who's going to own it.
They're probably still working through options right now, but
and this is like a firm wide tightening.
Yeah. I think maybe they saw what's been going on over at GE and thought, oh man, we should do some spinoffs over here. Worked out pretty well for them. So they're trying to tighten things up over there. And this is going to save them about $870 million over the next 3 years, is what the report said. So spinoffs can be accretive.
I have some news. Speaking of spinoffs, about 20-something years ago, 3Com and Palm had a little spinoff situation. It was quite the predicament, and I reached out to one Jack Schwager, author of Market Wizards and many other books, and he is going to be a guest on a live event that Strazza and I are putting together shortly. So I haven't shared this news with you guys. I was pretty confident about it because I know Jack Schwager, no big deal. But yeah, he's in. So Strazza.
So this is so exciting. I've already kind of been rereading Wizards 1 on our last trip, but gonna finish it. Did you give him an idea of how long? Because we definitely need. It's a conversation we need at least an hour.
We're gonna keep him there. We're gonna keep him there until he says I gotta go. How about that?
All right, good. Yeah, I'm really excited about it. Is there professional in our industry that you would rather interview? Because with Jack Schwager, you kind of get like 30 interviews in one.
You said it. This guy has interviewed all of the greatest traders ever. There is no human on the planet who has spoken to in depth with as many of the most legendary traders of all time as Jack Schwager. That you nailed it, Strazza. You're absolutely right.
So this is kind of the cheat code, right? We're just interviewing the interviewer.
That's right.
Yeah,
that's right.
Can't wait.
So I encourage everyone to read Market Wizards, the first one for sure. And then when you're done, read the second one. Then when you're done, read the third one. Then when you're done, go back and read the first one again, right? Because there's Market Wizards. Then there's like the new Market Wizards. Then there's the Market Wizards of hedge funds. Then there's the unknown Market Wizards, which is the most recent one, which actually had a blurb in it. And then there's another book that he wrote that I really like a lot called Making Sense and Nonsense. Is that it? Is that the name? Is that the book? I don't want to. Making Sense and Nonsense. I took a picture the other day. I put it on the Slack.
I think that's it.
The name of the book is.
I haven't read that one. I didn't even know about this one.
Making Sense and Nonsense: How the Markets Really Work and How They Don't. And he's got a chapter, which is my favorite chapter, maybe of any book he's ever written, which is called the Deficient Market Hypothesis. Where he just abuses anybody who thinks the efficient market hypothesis is right and just like lays into them, just like abuses them. And it's like chapter 2 or chapter 3 of the book. It is fantastic. Highly recommended. Making Sense and Nonsense by Jack Schwager.
We should spend some time on that too, because I don't think most people realize this is one of the age-old academic arguments. It even has its own acronym, right? This is the EMH. You learn about it in college. Really wild.
It was just a hypothesis and it turned out to be wrong, by the way. We have the data. In fact, Andrew Lowe of MIT wrote a book called the non-random walk down Wall Street,
Yeah.
right? Because there was like some angry professor in New Jersey, forget his name, who wrote a book called Random Walk Down Wall Street, which is all lies. It's just
Burton Malkiel.
it's literally an angry professor
that's a pretty
lying to
famous book
people.
there. That's a pretty famous book.
It's a
Oh, I
very
know,
famous
but
book. It's
I
a
know,
good
but the
book
guy,
to have it.
but
Yes.
it's literally a book full of lies. It's literally a investor like lying to investors. This
You're both
angry
right.
professor.
And it's like sound economic theory. And we talk about the difference between theory and practice on here a lot. And JC, I think, your take on it is just spot on, where we have the data. Books have been written about this. White papers have been written. It's not true. It doesn't work. And anybody who just spends some time in the market, you don't need the white paper. You don't need the data, right, to know that markets are not efficient. But
The deficient market hypothesis chapter in that book is great. And if you really want to go down the rabbit hole and go read Andrew Lowe's work, non-random walk down Wall Street, knock yourself out. I've done all these things. Just take my word for it. It was wrong. It was a cute hypothesis. It was just wrong.
I'm gonna get the book just for this chapter. It sounds interesting.
Funny you said that. I'm pretty sure that's why I originally bought the book myself many years ago. Is for this one chapter, which is hilarious. Yeah, it's great. Great book. Making sense of nonsense, right?
Couple other things. Super Micro doing a shelf offering, 2 million shares. If you're wondering why it's down this morning, there you go.
And they're selling the Nvidia news, huh?
So far, yep. Okay. I did attempt to watch the keynote last night, and then I quickly realized I don't know what the hell that guy said. It is so far over my head. I was like, well, why am I even here? What am I doing?
That's why I saw your boy on Twitter, Dennis Dick, saying the exact same thing. He's like, I don't know what the hell this guy's talking
I was
about.
Like, I thought I could watch it until I get the gist, and I was like, I don't know what the words that he's saying right now. So anyway, over my head, I gave up.
You kind of be an engineer, like a tech industry professional.
Yeah,
it's not like
throw up slide 2.
It's not like watching an Apple presentation.
No, not in the slightest bit.
Throw up slide 2 as semiconductors are getting the shit kicked out of them. So up on top, you're looking at the market cap weighted semiconductors index, which I think Nvidia is like 25% or something crazy like that.
Yeah.
And then below you have the equally weighted semiconductors, which has been making lower highs all along. This has been an interesting chart, and Strazza has made some good points on how, the biggest semiconductors are the ones getting all the business, and that's a fair point. And again, I don't have a crystal ball, I don't have all the answers, but I do find it interesting that the equally weighted semiconductor index was definitely not confirming what the cap weighted index was doing. So does the equally weighted index catch up to the cap weighted index, or is the cap weighted index catch down to the equally weighted index? I think we're starting to see some of the latter.
Spencer, I might need some help here. Tell me if I'm crazy. Isn't this the same theme? I came on here, what was it? It was Friday. No, it was Monday. Monday of last week, talking about the semiconductor action from the prior Friday.
Mm-hmm.
You almost booed me off of the show for talking about one day's action. As it turns out, let's throw this up. That one day's action was the start of something, and that's all I was really trying to. No, Spencer,
you were referring to the Friday before that, right? It was a Monday. You were talking about a Friday because that was the big down day in Nvidia, right?
That was the start of it. That was some nasty action. You never want to think too much about just one day, but you get the follow through, kind of like we did. We came on the next day too. Remember, Jason? We were like, that's kind of like an indecision day. No follow through, no lack of follow through. Well, we've had it since, right?
Mm-hmm.
Failed move, fast
Credit
move,
to you.
slower.
Credit to you.
And it's not the end of the world either, because we're talking about the strength beneath the surface and things like materials and industrials and energy. So it kind of just feels like standard bull market rotation to me. But it's going to feel worse to a lot of people because so many people or average investors are heavily overweight the stocks that are now being rotated out of. Fair?
Yeah. It's really just positioning is really all it is. And you look at all the data, and investors are very much positioned in growth and technology, and they're not in energy and materials. So like Strazza said, that rotation is perfectly normal within bull markets. It's perfectly okay. It's perfectly okay. Diverson says, it's sad to hear someone like JC hitching their bear wagon. What bear? We're literally buying stocks. What bear wagon? We think these stocks go up, just not the ones that were going up last year. It's not a bear wagon.
Chill.
I don't know what a wagon is. What do you mean wagon? Yeah. Try to keep up, Diverse Insights. Try to keep up, buddy.
And if it does feel worse, right, this rotation to you than it should, then you should be asking yourself or kind of checking out your portfolio to see how it's weighted and allocated. Maybe you need to own more of different stocks that you didn't feel like you needed to own before.
Yeah.
And that would be fine, right? If you're just now putting a position into energy or financials or materials, you didn't miss much. There was a lot of sideways for the past few years. So there's no need to feel like you're chasing or anything like that. Rotation is the lifeblood of any bull market. We're going to see it. Just be prepared for it and be prepared to do something about it.
Yeah. And by the way, it's not my fault that the NASDAQ 100 is at the same price it was 6 weeks ago in early February. It's not my fault. It's not my fault that the Dow Jones Industrial Average is literally at the same price it was in early February. That's not my fault. It's not my fault that Apple goes down every day. Like, I don't have any control over it, right? So it's not like I want something to happen or I don't want something to happen. Things are happening, and we can either try to profit from it or not.
Throw this
That's
one
up
up
to you. This is America. You do whatever you want.
I'm with you. And look, it's been a great run for these leaders. Like, question is, will the rotation come back? I don't know. Maybe. We'll talk about it if and when it does. Throw up the XLK SPY going all the way back to the dot-com bubble. This is the scene of the crime.
Yeah.
This relative trend could blast right through there. Absolutely. We've seen crazier things. Not really the bet we want to make. We're right back there. So, financials, materials, industrials, energy gets to outperform for, God forbid, a quarter, maybe two, maybe the rest of this bull market. In the context of this chart, I think that would make lots and lots of sense. And also, most importantly, that's not to say that XLK or these stocks in the numerator here are no longer going higher. They're just going higher at a slower rate or a slower pace than the benchmark.
Yeah. Energy literally at the highest levels relative to the S&P 500 today since the first week of January. We continue to see this rotation. And again, I don't have any control over it. I really don't give a damn what the market does. The market's going to do things, and then we can either try to profit from it or not. We're seeing rotation. We've been seeing rotation for almost 2 months now, like 6-7 weeks, I suppose. We've really been seeing that. People are acting like this is still last year. It's nothing like last year, like nothing at all like last year. Especially not the last couple of months of last year, where things really, this is the opposite of that.
I think back to performance charts that we were putting together that showed like the performance from the October 2022 lows to like some period in October of last year. And XLK was up like 50-something%, and the rest of the market was up like 10. And small caps were like flat or negative. That's just a massive performance gap, right? So the first, say we're halfway there in this bull cycle. The first half was very lopsided, right? So if the second half were the opposite, shouldn't shock anybody. I think you could also make an argument, and this is why markets are fun and why we're on here talking about this stuff every day. You could also make an argument, this is an AI-fueled bull market. This is a new mega trend, a new technological revolution. So yeah, growth and tech and anything that touches AI will outperform and continue to outperform and will outperform for the whole cycle. We don't know the answer, right? But to see some rotation would not be anything new. In fact, it would be pretty much a hallmark characteristic of these cycles.
Every time tech starts to underperform, the question has always been, okay, but for how long, right?
Right. Yeah, like it's going to get it back eventually, and it
has. Yeah, because it always has, at least in the last 15 years.
Maybe it's already been discounting or pricing in all this AI stuff.
Maybe. Speaking of rotation, a couple of things I saw overnight. Goldman Sachs note hedge funds piling into bank stocks and financials at their fastest pace in a year.
Is that good or bad, JC? Do we?
Although the Goldman
Now, remember the joke internally in our team meetings was that we didn't own enough financials. We didn't own enough banks. That was in October.
Yep.
Last year. Yes.
Although
this went from one side to the other, it sounds like.
That's right.
Well, not really. The prime brokerage desk does say that their clients are long financials, but relative to other global stocks, they don't. They're underweight. So
why doesn't Goldman Sachs worry about how come nobody's buying their financial? all their peers look great, and Goldman Sachs just can't move here.
It's crazy, that Goldman Sachs chart.
That Bollinger Bandwidth, like lowest on record.
Yeah, that's
and
hilarious.
It's not mattering.
I want to talk to Pat. Is Pat here?
Not yet. And then the last thing I have was a study from a consulting firm, Oliver Wyman. The commodity trading industry has accumulated as much as $120 billion in cash reserves after 5 years of record growth. You're talking about what could drive prices higher. Very simple. Cash on the sidelines, or even just cash on the sidelines coming in, right? More buyers. So
people are trading commodities. What is that?
Yep, those are people trading commodities, institutions.
Yeah. As far as the cash on the sidelines, I'm still in the, I want to see the unwind start, right? Because cash on the sidelines in these money market funds, we just hit $6 trillion. Is that right? $6 trillion in money markets, but it keeps increasing. So
it ain't coming down.
When that starts to come down, I think that you're going to see that flowing into stocks simultaneously. You haven't seen that.
Hold on. Doesn't it just always increase though? Because those balances that you're talking about, that $6 trillion is earning.
The answer is no.
But it's earning interest.
No. But the answer is no. It's not always increasing.
You get what I'm saying?
Yeah, the outflows would have to
bias to that number because it's earning interest.
Yeah, the outflows would have to overpower the interest. Sure.
Got it. Okay, fine. One more. The Force is with Bob Iger.
Is that official or
the Force?
George Lucas, the largest individual.
Oh, that. Oh, okay. Yeah. No. The proxy fight's still going on. Yeah. Okay.
I have no idea what you guys are talking about.
They're recruiting. So they're both recruiting, right? Nelson Peltz and Bob Iger, they're recruiting.
Recruiting who?
There's this proxy fight for the board of Disney, JC. It's not super interesting, even to me, and I'm a shareholder. So
isn't JC, aren't you long Disney?
Yeah, so I get a vote?
You do get a vote, actually.
For the record, my kids are long Disney. I guess I am technically, but it's my kids' account.
Are you guys gonna vote?
I already voted. I actually voted. It was the first time I've ever voted for any corporate action in my life.
I never have.
Yeah.
I never have. Maybe I will just for fun.
Yeah, basically that's what I did. I voted for fun.
And then who'd you vote for? I don't even know. What are the options here?
He voted for Iger. He's a Disney purist.
I did vote for Iger mostly because Nelson Peltz is on he's on like team Ike Perlmutter, who's this other executive that got pushed out, and not really a fan of his plans really. So
Spencer hates hedge funds.
I love how much Spencer knows about all this stuff. This is hilarious.
Spencer, you secretly hate hedge funds?
No, it's not. The argument that your stock is down and therefore put my people on the board, I just, it doesn't hold a lot of water for me. You know what I mean? Like,
listen, when you have money talks and bullshit walks, like if you can afford to buy your way and your buddies on the board of directors, good for you. God bless. Like if I had just money to throw around and I wanted to bully people around, I'd be like, yo, I'm coming in. Strazza's coming. We're bringing in Spencer. Let's go. Y'all are fucked, right? Like I could do that, I would. Like that's great. That's gangster right there.
Yeah.
I'm into it.
Well, we'll see. All right. You I saw, speaking of big hedge funds, I saw a big name on the hot corner today.
Ooh.
Oh, we had a great list today. I would love to run through it real quick.
Yeah.
Hot corner. So hot right now.
Uncle Carl coming in hot.
So this is a big purchase. Do we have the chart? Otherwise, I'll grab it real quick. So this is UAN CVR Partners LP. This is one of those nitrogen fertilizer companies, and this is a massive stake.
Hold on. Can we talk about how nonchalantly Strazza just said, this is one of those nitrogen fertilizer companies. How many nitrogen fertilizer companies are there?
Mosaic, CF Industries. There's a good deal.
Really? I didn't know nitrogen was involved in any of those.
Some of the bigger chemicals.
I didn't know.
Stocks. Yeah.
Cool.
Listen, what do I know? It's fertilizer.
You know more than me.
Yeah, I guess so. So, and Uncle Carl probably knows a hell of a lot more than both of us.
No, Uncle Carl don't know nothing. Uncle Carl's got guys that know.
He's probably got a great
You
team.
think Uncle Carl knows about fertilizer? I mean, he probably knows more than you and me, but he's not the expert. He's got dudes.
So this one stands out. Big stake. We'll continue to monitor it, but I don't know, what his plan is here. It is a D, so this is an activist stake, as Uncle Carl tends to do. Another Form 13, Myriad Genetics, MYGN. I'm paying really close attention to the biotech names that pop up on this scam because they've been good. We've already found a number of good biotechs, and that's in a sector or a subsector that hasn't been too strong beneath the surface. The ones that pop up on this scan continue to have the nicest looking charts. So this MYGN, it looks a bit reversally. I think 24-ish is your level there. We'll be keeping an eye on it. And then again, we have to talk about this Archer Aviation because it just keeps popping up. Who knows how big Stellantis is planning to get in this, but this does have that failed topish kind of formation going on where I think you could figure out a logical place to define your risk and get long this one for a trade. It also is trading warrants, which I was talking about last week, and I'm personally long, so that's interesting, and I like that a lot too. Turning Points brand, this TPB, we talk about these bases all the time. This is like a perfect reversal pattern. This is the same one that we've been buying since last year, and they make zigzags and other tobacco-related accessories.
Can we talk about the Stellantis purchase again? They keep buying this thing, ACHR. Like every day there's a filing, whether it's Stellantis or there was another, like I think one of their insiders keeps filing too.
No, who was it?
It's not just Stellantis. There's another big buyer who keeps
ARC.
coming in.
No, it was ARC.
It was ARC. Got it. Why
Yes.
is ARC buying this?
A little Scoopy Doopy. You could define your risk either of these places. I think.
Ooh, a little Scoopy Doopy. Is that in the Investopedia?
Not yet. Not yet. No.
The kids these days are like, oh, Scoopy Doopy on Investopedia.com. I heard Strazza talking about the old Scoopy Doopy pattern. No?
I am currently writing about the scoop and score pattern.
You should submit it to Caleb to add to the Investopedia on Scoop and Score.
He would, because he's so fun.
He definitely would.
He 100% would. We could do that.
I don't know if he ever added hot mess.
We talked about that. I know
we talked about it, but I don't know if officially hot mess is a definition on Investopedia. I mean, it should be.
Tyler Wood has given me his word that will be in the curriculum one day.
Hot mess?
Yeah, the hot mess.
What was it? Emerging markets, like in 2014 or something like that. EM was like the hottest of all messes ever.
When is EM not a hot mess?
Fair. Well, it was an easy one for me to think about, right?
The big standout on today's list, though, is this UAN. That's almost 40%. That's just massive. What is the market cap on this stock? And look, it's right on theme, right? So this is only 680 million. It's okay though. It's right on theme. We're talking about energy. We're talking about materials. We're talking about this little cyclical rotation going on beneath the surface. We're talking about putting trades on Nucor Steel and Reliance Steel and Southern Copper breaking out. Copper having its best day and week in over a year last week. And now Uncle Carl's out here with a 38% stake in some nitrogen fertilizer name. Right? Supporting evidence. I love this trade.
What?
You didn't notice, Spencer.
Hold on. That was one of the things.
Yeah.
Do it again.
I love this trade.
Good one. I'm a little bit nervous to hear what voices he's going to bring of mine.
We got a few. We got a few.
Why don't we hit the recess bumper and you can share one of them? How's that?
All right, we can do that.
Slowly leak them out.
Yeah. Obviously.
I'll have a quick recess. So, for the oven is very underrated. You know, the kids these days with the devices, and they got the sous vide, and they got like the smoker. Everybody's smoking everything after COVID. Like, I get all that. Don't get me wrong, and I have those toys too. The oven is a great device. Underrated, the oven. You could set the temperature at any temperature you want.
Yeah.
You could
Timer
set
too.
a timer.
Timer, yeah.
Since when are ovens, ovens are rated. Ovens are they're rated, man.
Ovens are underrated. An
Dude, you're missing-
underrated way to cook food in the oven. I'm
You're
telling
missing
you.
one. It cleans itself.
It cleans itself.
That's true.
Cleans itself. It's a great point, Strazza. Cleans itself. So everybody out there, if you don't have an oven, get involved.
All right.
I have 2 of them.
So on this, I got beef and pork ribs in the slow cookie right now. Starting early. Slow and
Beef
low.
and pork ribs? Well, that's how to do it. You put them in the morning, or you put them in right before you go to bed. They're ready for you in the morning.
You wouldn't do them together?
Pork and beef ribs together? No.
Why not?
Pick one.
Really?
Yeah. You know what? I did once because I did want to test it. I did oxtails
Yeah.
and short ribs together because you literally cook them the same way.
Yeah.
Short ribs are nowhere near as good as oxtails.
Yeah, I believe it.
Like, short ribs are good if you just have short ribs, but if you have an oxtail and you have a short rib next to each other and you try them both, it's not even in the same category.
So the pork's gonna cook faster.
They're different sizes, aren't they?
We cut the pork in half. They're close though. They're close.
And you have them in a slow cooker?
Yeah.
Nah, oven, bro.
Really?
Yeah.
It's too low.
200.
Okay.
230.
How long you got to cook that for?
All day, baby. All day. Call me
Hey.
before you do it because you want to wrap them in aluminum foil so they steam.
All right.
Can you bring up slide 2? The big announcement from NVIDIA last night, their new GPUs, which are bigger, fatter, larger than ever.
What is a GPU?
Blackwell.
Hold on. For us mere mortals, what is a GPU?
Graphics processing unit. And
what is that?
that's what NVIDIA makes. That's their product, right?
Is that a type of chip? Because they make chips, right?
Yeah. So these are their new powerful AI chips, and they're called Blackwell. That's the code name. So shout out to Julie Fredrickson, who had to update my personal favorite finance meme of all time with the Black Rock, Waterstone. Now we have Blackwell. We also have Bridge. Don't confuse Blackwell and Bridge.
This is a great. Who is Julie Fredrickson?
I'm not sure, but credit to her.
You don't know? We don't know who she is.
No, I don't think.
Get her
I don't
on the
think
show.
She didn't come up with this meme originally, but she did come up with this update last night. So
Get her on the show. She sounds great.
this is great stuff. Anyway, that's my recess. That's all I got.
All right, guys. We've got a little conference call hangover. I tend to, by the way. I went on for an hour and 20 minutes last night. I was beat afterwards, man, and I was hungover this morning. Because it's not like an alcohol hangover. It's kind of like voice is a little sore. I'm a little tired. Like I feel it. I've been doing this for years. Like I feel the day after a conference call.
It's not because it's one sip of wine every 5 charts.
I didn't even finish a glass of wine. You know, it's funny because back in the day when we first started doing these conference calls, I would regularly pour a glass of wine and then just not drink it. It would just sit there.
Yeah.
And then so I just stopped doing that. And now I'm trying to, like, especially after I put the chart deck together, like it's all day kind of like putting the charts in. And it's like, okay, the actual event itself is like a luxury. Like, it's like, all right, guys, let's pour ourselves a cocktail and let's go into the charts. And
I'm done.
I had like half a glass of wine. I don't have the time because I'm talking the whole time. Like if it was you and me,
I noticed that. I noticed you didn't. It didn't sound like you were taking breath to drink, but
I try. I try to drink the wine so I can enjoy it. It also helps slow me down because I tend to just yell at you for an hour, right? So it also helps me. I just can't do it. I can't do it.
All right, Spaces with the chart report in an hour. Chart request live at 1 o'clock. Strazza and Pat right here on the channel. Email your requests to questions at stockmarketmedia.com. We'll address them on the show. Thanks to our guest today, Caleb Silver. Thanks to all of you in the chat for hanging out. See you guys later. Go make some money or don't. Your prerogative. But
Goes.
Run it.